All right. Sammy, thanks for joining us today on Newtown Insurance Podcast. Sammy,
Thank you for having me, of course.
Sammy's been selling life insurance for 25 years now.
25 years.
Yeah. And it's been a long time. Sammy and I have known each other since high school. So it's almost 40?
Let's not discuss that, but yes, 30-ish years we've known each other. Yes.
But Sammy's very versed and knowledgeable in life insurance. And we're going to touch on some of the basics of why we should get it, why it's important, and some of the things he's seen over the years and the challenge that he's faced. So most of us insure everything. We're so interested in insuring our cars, our home, our phones, but no one really takes the time to think about their life, right? So what are some of the challenges that you face when you're trying to sit with a customer and explain to them the importance? Is it more money or is it more hesitation? Is it a combination of both? What's the real hang up?
It is a combination of both. And for the record, I've seen clients that are 21 out of college all the way up to 50, 60 doing trust wills estates. So there's a different opinion on different individuals. Younger people think they're invincible and it will not happen to them. And I understand what they say, and I also explain I've delivered checks on 4-year-olds, 26-year-olds, 60-year-olds, and 80-year-olds. It can happen at any time, and nobody expects it. Yeah. I had a client, 21, murdered in Cancun on spring break. So it can happen to anyone. So it's not my job to put the fear in them. I try and make them understand that we are not invincible, and it can happen to anyone.
Yeah, that's one of the challenges that we face, We almost feel like it's uncomfortable for the customer who should be insuring the people they love, which is themselves, because really, if I get life insurance on me, it's not for me. Correct. It's for my wife and kids.
Correct.
So why is there so much uncomfortable uneasiness with life insurance? Because to be honest with you, you can go your whole life and never file a homeowner's claim.
Right.
You can go 20, 30 years and never have an accident, but we're all going to die.
There's one certainty.
Exactly.
So it's one policy that you are going to cash in on eventually.
So what's the disconnect? Like, what do you think it is?
I can't say I can put my finger on one particular thing. On younger people, it's I don't need it. I'm too young. It doesn't matter. People call me all the time when they buy a home, when their significant other gets pregnant, or when someone passes. Those are your 3 biggest things. And then it's like, oh, well, they start to realize, if I'm not here, this could happen. What am I going to leave behind? Right. Do I want to take care? Now, you do sit with clients occasionally. They'll say, you know what? I'm a single guy. I don't need anything. If anything happens to me, they're not the ideal client to speak with, unfortunately. Right. I don't mean to chuckle, but, they're not our ideal client. But if you're sitting with someone, now I'm 50, 60, 65 years old, it becomes more important because you become closer to.
Right, but at the same point, when you're 50, 60 years old, like I get emails from customers all the time. I'm 66, I'm looking for life insurance. It's like, why did we wait 30 years to do this?
Exactly.
And then you expect to see what they see on the commercial, and they're going to get it for $10 a month. And it's not possible.
No.
Right? Like, I understand the mortality tables have changed and people living longer, but at the same point, we live in a society today where our diets are so bad. That's the real reason for all the health problems. Correct. You touched on something before, your customers contacting you when they buy a home. What's the difference between mortgage insurance, mortgage protection, and a regular life insurance policy?
There actually is no difference. The difference in a mortgage policy is if your mortgage is $300,000, new home buyer, a mortgage insurance policy is still a life insurance policy. It protects the owner's life insurance. But as time goes on and the mortgage amount depreciates, your life insurance depreciates.
Right.
So now, if you are someone that stays in your home for 20 years, you bought the house for $300,000, 20 years later, if your mortgage is only $50,000, you only have $50,000 of benefit.
Right. So that's called a what?
Decreasing policy. Decreasing term.
But PMI, private mortgage insurance, doesn't cover the homeowner.
No, it does not.
And who does that cover?
The bank.
The bank
covers the bank.
Okay. So what is the benefit of actually getting a true 20, 30-year term policy or whole life versus mortgage protection that we get all those little ads?
So the mortgage insurance policy will be a tad cheaper because it is a decreasing premium. And you take an average person, 30, 35 years old, buying a $500,000 house, which is very common now. They're established, they're starting to make money in their 30s. A $500,000 term policy for a 35-year-old could cheap. A 20-year term could be $300 a year.
Yeah.
$350 maybe. If they're a true American, a little overweight, a little high blood pressure. It could be a little bit more, $400 or $500. Whereas a decreasing term policy would be $20, $30 a year cheaper.
But you're getting less in the end.
You're getting less in the end. Doesn't make any sense. And at the same time, if you buy the term policy from a reputable company, you can always convert it over to whole life insurance down the road, which is also something that people are interested in too.
So is life insurance really about death, or is it about responsibility? See where I'm getting at with this? Because it kind of seems like, we're all going to die. I'm not going to die tomorrow. I'm invisible. But isn't it more of a fact of responsibility as a father, as 100%. A husband?
Yeah. So that's a very good point. No one's ever actually posed it to me that way. When you buy life insurance, you are not buying it for yourself. You are certainly not, because if you ever use it, you're not here anyway. So it is more, I've never been asked that. It is a responsibility thing. If you are married, husband, wife, 2 children, 3 children, 4 children, your spouse doesn't work, 100%. If you do not have a substantial amount of life insurance, you are doing your family an injustice.
Yeah, I agree.
I don't want to be harsh when I say that, but
that's true.
Yeah.
All the years that you and I have been doing this, I actually, for the first time almost 20 years, that I had a gentleman who was married under the age of 40. So already got $1.5 million in life insurance. He has 2 young children. He says, you know what, John? He's like, give me a couple of quotes for my kids.
Smart.
And I'm like, did you want an IUL, something index, where if you get it now when they're 2 to 4 years old, it'll be worth like $300,000-$400,000 by the time they retire. He's like, you know what? Let's do that, but also give me some term policies. And I'm like, that's really smart. He's like, well, I'm going to be honest with you. If something happened to my kid, I'm not going back to work right away.
No.
And that's, I think, a big disconnect is a lot of, and I don't know if you've heard this, but a lot of the head of the household, whether it be the breadwinner being the male or the female today, they don't think of, I've got car payments, credit cards,
Absolutely
I've got college tuitions.
No. So
2 kids going to college is going to be $500,000.
So while you were talking, I have 2 bullet points, and I'll hit that one first. So I tell people this. I have wealthy clients, and there's one that's coming to mind right now that said, how dare you think I would buy life insurance on my children? I don't want that money. And I said, listen, I understand. I'm a father as well. I understand no parent wants the money from the death proceeds of their child. But here's what you don't understand. You own a business. You have employees. You own a large home, a very large home. You own a beach home. You have 4 children. You have 6 cars.
Lots of property taxes.
A boat. Property tax, I said. If something happens to one of your children, and again, I started out by telling you guys, I've delivered checks on 4 years old. All of your bills are still due. Your wife is not going to want to go back to work. Your day to day is not going to be the same as
Completely changes
right now. You're not going to wake up happy for a long time. You're going to need a lot of mourning time. And you don't want the money, but what it does is, there's one equation that people don't think about that this does. All of your bills are going to be paid for 2, 3, 6 months, maybe even a year if you have enough. It's just one less headache. You don't have to say, you know what? I don't have the money to pay my mortgage this month. I don't have to worry about paying my boat payment.
I don't have to worry about going to work.
You don't have to worry about going to work. It gives you the mourning time. The other thing I was going to tell you was with the breadwinner of the family. So sometimes people will say, my wife's pregnant. I'm going to wait till the baby's born. Whether you're here or not, the baby's still going to come. The baby is still going to come. And then the other thing is, if anything happens to my spouse, I don't need the money. I can take care. I said, that's not the point. When you think of what a spouse does, laundry, cleaning, to and from school.
Yep.
Do you want a nanny? Do you need a nanny? Multiple children. You might not have the bandwidth to take care.
Yeah, what a mom does
right
every
now.
day.
Yeah, you certainly don't. And listen, I am not in my wife's shoes every day. I could not do what my wife does all day long.
I agree.
I will be point honest and say, if anything happened to my daughter or my wife, I would need to have something because I would probably not be able to continue to sell insurance.
Oh, yeah.
Yeah.
Same here.
So kudos to my wife and everybody else out in the world.
Yeah.
Yeah.
You know, another thing I wanted to touch on really quick that I wanted to ask you is that we get a lot of customers who think, oh, yeah, I got it through work. I got enough.
It's the biggest one of them all.
What are some of the biggest downfalls of being under the thought process that, oh, I'm good, I'm fine?
I hear that more than that's every rebuttal that I get, whether it's their spouse, I have enough. So the worst thing to think of is if your spouse has $200,000 or $300,000 at work or 2 or 3 times their salary, you keep that completely irrelevant. That's what I tell all of my clients. Anything you have at work, just consider it not there. If something should happen to you when you're at work, your family's going to be better off. They're going to get a little bit more money, but always buy a separate policy. And that's not me just selling everyone. That's everyone will agree.
Let's also touch on what happens before we die, right? Like if you're a business owner, disability insurance is huge.
Huge.
You know, and that's one thing that, you know, I put on the back burner, but I know that, you know, I got to get like last month.
Right.
And it's important for business owners to understand that, you know, if you own a business, if you're running a business, yeah, you might be young and healthy, but at the same point, we have more of a chance of getting disabled. Right? What statistic? I think 25% of all people are going to become disabled before they're 55
due to illness
years
or
old.
injury before dying prematurely.
Correct.
Disability insurance is the least sold and most used insurance and has been for a very long time. People will say they can't afford it, and I tell them they can't afford not to have it. That you will certainly use. And again, you could be walking across the street, hit by a car. It could be a car accident, fall down the stairs. I have a friend who runs a salon, was literally on the phone, not paying attention, fell down 4 steps, broke his elbow. He's out of work for 6 months. Never saw that coming. Again, you think you're indestructible, but you can also buy that younger. You know, you can buy automatic increase benefit. It's called an AIB. Automatic increase benefit allows you, as your income goes up, every year, most policies will allow you to sign your name. Your policy benefit will increase 3%. So as you get a raise, a year goes by, you have more disability insurance. No exam, no insurance, anything. It just automatically increases. And we tell people to put that on there because you don't think, as you make more money down the road, do I have enough disability insurance? You don't know. You don't necessarily know if you're going to have to come back to me and say, Sammy, do we need more disability insurance? Sometimes my clients will forget. They get the letter in the mail. Should I increase my policy by 3%? And I say, listen, did your income go up? Yeah, a little bit. Then sign your name.
Probably a good idea.
Probably a good idea. It might cost you $7 more a month, but do it for sure.
Yeah. Let's touch on the health classes. A lot of times today we'll see these ads on YouTube, Instagram, Facebook, and oh yeah, you know, I'm a widow, my husband died, and we only paid $10 a month, and he was a smoker. Like a lot of people, I think the challenge for the average person or someone who's interested in life insurance is finding is that these ads that they're seeing is not reality. It's like in our world.
No.
They advertise these $30 a month insurance and they don't exist.
No.
They only exist for people who are pretty much destitute and can't afford it, right?
Correct.
And it's just to put the car on the road. So can you get into a little bit more of a deep dive on health classes and why you only have to take these ads that are $10 a month with a grain of salt? And what are they proposing at that rate?
So there are rate classes. We start, typically most insurance companies are an ultra rating. They are a select, ultra rating would be you're very healthy, tall and thinner, low body fat, young, no medication, no issues. Those are your ultra marathon runner, swimmer, very healthy people. Your select preferred, and I am very healthy, but I get select preferred because I like to eat a little too much. I'm actually not an ultra preferred. So select preferred will be your next tier down. Then you have your standard. Then there is your select tobacco. That means you're a healthy smoker, which I know is an oxymoron, but there are smokers that don't really smoke a lot and they live to 90 years old. You could be a healthy smoker. And then you have tobacco. And then after tobacco, then you have your class ratings, which are A, B, C, D, E, F, G. I've seen a G once.
I don't even want to know what that looked like.
Not pretty. So for conversation's sake, an ultra $1 million. So I'm 50 years old. I purchased $1 million. The day I found out my wife was pregnant, that week I purchased an additional $1 million just for my daughter. Because I know $1 million is what it takes just for her. And my wife has a separate policy. So I get Select Preferred. My additional $1 million, which I bought 3 years ago, was $175 a month. That's Select.
Now again, under 50.
Under 50, right. Correct.
Explain to us what happens when you get after 50.
Yes. So there are, they get off the rating classes. Your big year increases are 40 years old, 50 years old, 60-year-old is probably the worst. Once you get above 70, you can only buy a 10-year term. You're limited to the term length, and your premium does go up a lot once above 50. So get it while you're young.
Yeah, explain exactly too what's healthy in the eyes of the life insurance company, because some people think, oh, I'm healthy, I'm 5'5", 180 pounds, and I got to take high blood pressure medication. To, like you said, the average American, that's healthy, but to a life insurance company, no way.
No.
Right?
So you're healthy person if you're 40 or 45 and you're 5'10", they want to see you south of 200 pounds, which is not a lot of Americans. If you have a good family history, you don't have any cancer in your family, which they do give you bonus points for that. You know, your mother and father are still alive. They're well into their 80s or close to 90s. They give you bonus points for that. They want to see your medical history. So there's something that people aren't aware of. It's called an MIB report, which is a Medical Information Bureau report. That is your credit for your health. They want to see you go to the doctor every year. You get a blood panel every year. These are all good credit things. So if you're 5'10", 180 pounds, let's say you have a little touch of cholesterol. If you're taking medication and your cholesterol is maintained, all those other good things, they won't change your rating. But if you're taking your cholesterol medication and your cholesterol is still high, that means you're eating pizza, mozzarella sticks, fried food. Let's be honest, they might not give you a Select rating or an Ultra rating. They might give you a standard rating, and your rate is going to go up 10, 15%, 20%. Age doesn't help it. So as you get older, keep your cholesterol lower.
But that's, again, going back to get as much as you can, as young as you can.
Yes.
Because that's when it's the cheapest.
Correct.
So getting back to all the ads on TV that people are watching, they should really understand that they have to have health, medication.
Or no medication.
Right.
No medication.
No medication.
No medication.
Do they also look at motor vehicle records?
110%.
So let's say I am 50 years old. I'm healthy, but I have a DUI.
In New Jersey and Pennsylvania, New Jersey, you will be crucified if you have a driving record. If you have a lot of points on your license, I've seen guys, marathon runners, healthy as can be, perfect medical history, with 10 points on their license, just speeding tickets, declined.
Really?
Not even a DUI, declined because of speeding tickets. There's more cars on the road in New Jersey. That might change if you're in the middle of Montana, but in New Jersey, if you have a heavy foot, you're at risk of what?
Getting into an accident.
That's exactly right. They will decline, not even a DUI. A DUI, decline.
So are there any professions that they look at that might be high risk?
Yes, I have a good friend that's a helicopter pilot. That is a decline.
Really?
Helicopter decline.
So he would have to what? Just only get like a group health insurance?
He would have it through his group, correct.
And that would be through his employer.
Through his employer. Usually, if you're honest, most people are not on their application. You know, if you're regularly skydiving, that's a red flag. If you're racing cars, which is not cheap, that's a red flag. If you play polo, which obviously not a lot around the New Jersey or Pennsylvania area, you know, but polo, they don't like horses.
Really?
They do not like polo. No, because you fall off a horse. It's more dangerous than you think. Rock climbing, you know, if you're a window washer, high-rise window washer.
How about a roofer?
I've never had a decline on a roofer, believe it or not. Window washer, you're not getting an Ultra rating. they will tag you for something like that, for sure.
So do you get customers who say, well, my house is paid off and my kids are older and, my wife is, and let's say they're our age and they're 50, the wife is, no longer working. He's like, well, the house is paid off. They're not going to need it because I've got a little bit of life insurance left. What are some of the unforeseen bills that people don't see who may have their mortgage paid off if they pass away?
The wife isn't working?
Not working. I'm only asking because I ran into this last week. So
yeah, your monthly expenses aren't zero. You still probably have a car payment, car insurance, gas and electric,
property taxes,
Verizon bill. God knows the Verizon bill is not cheap. Hulu, Netflix, food bill. Yeah. Does she want to go on vacation? How much life insurance was there? How much money does she need to sustain herself? How much Social Security was there? Those are all questions that we ask in a fact finder.
Yeah. Well, that's the thing too. I mean, we're Gen X. Correct. We were the last generation to grow up without the internet. When you wake up in the morning, we didn't have iPads. We had the cereal box. You had to read the cereal box, right? Some of the best ice cream was the one that came out of the toilet roll cardboard dispenser with the thing on the bottom.
You're really dating us now, right? But thank you for that today.
But think about that. You know what I mean? We drank water out of a hose. Nobody carried bottles of water. It's so expensive to live today. I think there's a disconnect between a lot of people who think, well, everything will be fine versus things are just getting more expensive.
Absolutely.
It's not going to get any easier.
Yeah.
And if you don't have, and I should say, if you don't take the responsibility as being a parent or father or mother and getting the extra life insurance, even on your children, I think you're going to run into a big mess.
100%. Look back at cable bills. My Verizon bill is $240 a month.
And that doesn't include the streaming.
That because nothing. No. My father didn't have that.
It was $10
30, 40 years ago.
Yeah.
Exactly right. My father didn't have a cell phone bill. And by the way, back in the day, my father didn't have a car payment. You bought a car cash. Your bills were, I need an alternator. I need a new tire. My dad's cars were paid for cash. There's no $600, $800 car payments anymore. It wasn't like that.
Well, look at even repairs, right? I'll bang that dent and I'll give you a couple $100.
My dad would leave the dent,
right?
My father would leave the dent.
It's like the comedian Sebastian Maniscalco. Oh, we got to replace the whole front end.
Yeah.
Right? One of our clients, he's got a really high end, I think it's called an up display windshield on his BMW.
Heads up display.
Yeah, heads up display. Windshield was over $2,000.
Yeah,
because it had to be calibrated. When we were growing up, it's $300-400. You slap the thing on, that's it. You're done. Why does control over money, in your opinion, matter so much during grief?
When you say control over money, you mean of the money that's left over?
So whatever's left over.
Whatever's left over. That's what
when you're grieving, how much of an extra stressor is that on the family?
A lot. You're looking at a well of money that could run dry
within months.
Correct. And by the way, not to bring up my father's passing, it was 3 years ago. An average funeral is not $2,000-3,000.
It's like $20,000.
My parents, yes, I'm glad you said $20,000. My parents prepaid for their mausoleum. My mom wanted to show it to me like it was a beach house. I said, Mom, I don't want to see your final resting place. Quite honestly, my dad passes away, so I start to see where it's at. My dad's funeral, obviously we're Italian, you have to have the viewing night, you have to have the whole next day,
you have the
morning, you have to have a luncheon. Yep. It was $21,000. So then my parents thought they did the family a great thing by prepaying for things, and that did not include all the letters, taking the marble off the wall, putting my dad's name on it, year of birth, year of death. It was cheaper if we put my mom up there now because they were charging per letter.
Oh, my God.
You don't think of that. Then they charged us an additional $800 to put my dad's coffin in an additional plastic coffin so that there was no seepage to the person below him. $800, unforeseen. So you're taking a coffin and you're putting it inside a giant plastic box with a lid so nothing can leak out. $800 more. And my parents went 15 years ago. They thought they prepaid for all this. And sure enough, we got a bigger bill. So
what about...
So getting back to the well of money, yes, it can run dry quickly, of course.
And then how about we have some customer, but we have actually a lot of customers who are real estate investors. They don't believe in getting life insurance because all my assets will just pass into an inheritance to my family. And I'm thinking, well, there's probably going to be an inheritance tax, a capital gain tax, but with life insurance, the proceeds pass to the beneficiary tax-free.
Correct.
So why would it be in the best interest of someone to even get a life insurance policy if they had all that real estate?
The easy one is if you take someone, just a husband and wife. Husband and wife, if the spouse passes, one spouse passes, it's joint tenants with rights of survivorship. That surviving spouse inherits everything tax-free. Where the problem arises is when the second death occurs and the family thinks, I'm going to inherit this house. Obviously, there's a capital gains tax on the property. Some houses are $200,000, some houses are $1 million. You are going to pay capital gains on that property. It would behoove you to buy a life insurance policy just to cover the capital gains tax on that house. And what you are able to buy, and people aren't aware that this exists, it's called a joint life insurance policy or a joint comp life policy, where you're insuring two lives, the husband and the wife. When the spouse passes, one spouse passes, the policy stays in force, you don't get any money. The second death arises, that's when the policy pays out. So you're essentially insuring two people at the same time for a cheaper cost, and then you use that money to pay estate taxes or the capital gains tax on a property. Yeah.
That a lot of people don't realize is that's how, how to build generational wealth is through whole life insurance.
100%.
Because, if you get a family who's worth $50 million and they take out a $20 million whole life insurance policy, that $20 million passes to the heirs tax-free, then they use that money, buy a bigger policy because they're young.
Correct.
And that cycle keeps going.
So there are wealthy, extremely super wealthy people that have $50 million, $100 million policies. You're talking, I know the agent, I won't say his name. I know the agent that wrote Bill Clinton back when he was a senator. I know the agent that wrote Oprah Winfrey. And they're buying, now if something happens to Oprah Winfrey, she doesn't need to leave anybody money, but she knows that creates especially the Clintons, they know it creates the Kennedys. It creates generational wealth. If you want to grow, and it also creates a trickle effect where when I pass away, my daughter will get $1 million by herself. When she's older, she's going to know, well, when I pass, I hope that she does. She buys more for her children than her children. And the family will grow in wealth simply from life insurance. It's that simple.
Yeah, I remember what happened to my dad. He got it when he was making, we were doing really well. Mm-hmm. And I remember his financial planner say, look, Bob, you got to get something. And he's like, all right. He's like, just give me whatever. And then I'll never forget when they were in Florida, they called me up. He's like, I only can get $150,000 in life insurance now. Mm-hmm. Because he didn't think, it's 30 years later, who remembers that stuff? And at the time he had lots of properties, the business was still around, and he was making money, but he realized later on, he's like, well, I have all this, but sometimes the savings is not enough.
No, it makes a huge difference to have more. My father obviously passed. My dad had open heart surgery when he was 51. My father had a quadruple bypass at 51.
Mine did too.
I will be 51 in September, and I think about that. Obviously, I'm much healthier than my father, but after my dad's quadruple bypass, he was almost uninsurable. So I was younger. I was 22, I think, at the time. And when I started selling life insurance when I was 26, I was just turning 26, I couldn't buy any life insurance on my father. My father said, well, I'd love to give you the business. How much can I buy? And I said, Dad, they won't. Nothing. Yeah. I was able to get him a guaranteed issue $20,000 on top of a
burial expense. Correct. Or end of life.
End of life. Yes. Yeah. Final expense policy. And he had, he bought his policy when we were born. My brother was born in 67. I was born in 75. My dad had a $73,000 policy, a weird number, but that's what it was. So my family got that. And then I purchased an additional $20,000, and that was it. And I have the same $20,000 on my mom. My mom's side of the family is all strokes. So the carotid arteries get clogged, cuts off oxygen to the brain. So my mom was a high risk as well.
How about people with diabetes?
That's hard.
Yeah. I think that's a big misconception because a lot of people are under the assumption, oh, well, I have my A1C level under control.
Right.
But how does the insurance company look at that?
I have always, for some reason, from grammar school through high school, I've always been around someone who has diabetes, type 1, and is very difficult to get them insured. It is now become it's become easier with the insulin pump that monitors them constantly.
But that thing that they put on their arm.
They wear on their arm. They check it on their phone. It automatically releases what they need. It's almost like they're living with a pancreas on their arm, right? It releases what they need. I have gotten 2 people approved in the past few years with diabetes. Takes a little bit longer.
Now, say that again. 2 people in how many years?
5 or 6 years.
Okay.
Yeah.
So that's a small number,
Very
right?
small number.
Okay.
Right. It helps to have the insulin pump. It helped that they both had a good history. They were both onset around 4 years old. So they've had it their entire lives. They have circulation issues, of course. They lose tips of their fingers, tips of their toes because of circulation. And as long as you're healthy, you won't typically have those issues. But diabetics are not easy to insure. They will write them. I've never seen someone get approved that's not using an insulin pump. If you are administering the insulin yourself.
You mean a self-administered shot?
Self-administered shot? Correct. I've never seen that.
Because a lot of people think, oh, well, it's under control. I can get it now.
Yeah, it's not.
And then and that's what I always go back to is the ad, what they see, a lot of misinformation that's out. Because look, AI and the internet is great, but we have to look at it as just a tool because the amount of misinformation out there is absolutely insane.
Yeah.
You have no idea how many times we get customers on the phone. Oh, I see this. Well, that's what I'm saying. It's always good to reach out to a human like yourself, right? Or myself and say, hey, let me get an agent. Let me get someone who understands the business and let me have them help me guide me through the process.
Right.
Because a lot of times they think, I'm going to sign my name. I'm going to click a couple of buttons. I'm going to get $1 million for $15 a month.
Yeah, those are all those ads that are online. Wilfred Brimley, I have diabetes. Kudos to him. But those ads are exactly what they are meant to do.
They are switch.
They are meant to bait you, get you in. Oh, I'm sorry. Your health is this. We're going to charge you this now. And I went through all this trouble. I had my exam. I have this policy. And they're going to sell it to you. That's all they want. They just want you to call in. It's a marketing. I
had a customer about 5-6 years ago. Not really a customer. It was a prospect, a potential customer. So I called him up, I follow up with him, and we were talking and everything. He says, well, I want to get $500,000 for $20 a month. And I says, well, you're diabetic, you weigh 300 pounds, you're 5'10". And I said, you've got a better chance of seeing God on a cloudy day than seeing that happen because nobody's going to insure you.
Correct.
And he hung up on me.
Right. They don't like honesty.
No. And that's the thing. And I think you're right. I think today we're so afraid to hear the truth. We want to be lied to on the computer. And that's why I think it's good having an expert.
I don't like to have the conversation with people that are obese, high blood pressure, high cholesterol. But when I sit across from someone, I kind of have to gauge a little bit
where it's going
without being rude. I just want to say, how is your health? Yeah. You're sitting across with someone that's 5'10", 300. No offense to anyone out there. I come from a larger family myself, but you're not going to get an ultra rating. You're not.
But I think that's one of the biggest hurdles that we face today when we're trying to actually consult and help customers is that they're under the impression of these ultra preferred rate classes. Yeah. Right. Yeah. Right. I mean, I would probably get standard the way I am right now.
I just said earlier, I bought on Stella 3 years ago. I'm 5'11". I was 225 this morning. I am not an ultra rating. I'm not. I'm a select preferred. And if I gained 11 more pounds, I'd probably be a standard. I'm not. I'm one vacation away from that.
Right, but remember, no medication, no high blood pressure. Right? Work out on a regular basis. Yes. You eat right. So that's the other. Getting back to responsibility. Have you ever had a customer? Because we get these sometimes that, a client will call or ask a couple questions and be like, "Well, you know what? I really don't want to spend the extra $200 because I have the NFL Network, or I'd rather I'm getting a new iPhone. How has the stuff become more important than, like we were talking about before, the responsibility? Where did that come from?
It fascinates me when people spend more time or more money on their car payment, their vacation, their Hulu, their Netflix than what it's going to cost for a life insurance policy. It amazes me. And we are gluttonous Americans because of that.
You know? Oh yeah, we our consumption in this country is.
People will go to Disney World and spend $15,000 without even batting an eye, and they fly to and from with no life insurance. If you're in Disney World, you choke on something. No offense to Disney World, you choke on something in Disney World, and you pass in Disney World, and you don't have life insurance.
You choke on anything anywhere.
Anything anywhere. Yeah.
How about people who drive motorcycles? Any extra rating on that?
No rating. No rating change, but they will. So when they do your life insurance application, like I said before, you'll get brownie points for good health history. Your parents are still alive, no cancer history, no. Your negative is you have a motorcycle license. Your negative is, I have a pilot's license. I am a painter. I go on ladders all the time. Give you credits, and they put all of your positives and negatives into a big bucket. Whatever comes out, the underwriters they don't know you or anybody from Adam.
They're just looking at the numbers.
They're looking at the numbers. They're looking at height, weight, cholesterol levels. Do you go to the doctor? Do you smoke? Smoking is a big one. It will make your insurance rates 2/3 higher. When I tell people that, they think I'm kidding. I said, and don't lie, because if you lie about smoking,
they're going to find out.
They're going to find out. And if you lie, they will do a reconsideration 3 years, which means if you
mean like a look back.
So if you are a smoker and you tell the truth that you are a smoker, every 13 months you are allowed to retest and say, I am no longer a smoker. If you come back and you're not a smoker, the insurance company will lower your rates.
Nice.
But if you lie and you say, I don't smoke, and there's nicotine that comes up in your system, when you get approved, you will get a note on your policy. Reconsideration, 3 years. That means they will clip you the higher premium for 3 more years.
Because you lied.
Which also goes on your Medical Information Bureau report. So if you think you're going to be slick and go to a different company
and try to do the same thing,
they are also going to see. So you are 3 years smoker. So tell the truth. And the other thing, I'm going to go back to one of your questions. You can add this in anywhere. So a lot of the times, husband, wife, 2 children, someone doesn't go to the doctor ever. I thought this when you were talking earlier. Someone doesn't go to the doctor ever. Sometimes their first exam is their life insurance exam. I haven't been to the doctor in 5 years. I'm healthy. I'm good.
And then they find out everything.
I had a client owned 5 nail salons, ton of money, truckload of money, got declined, liver disease, had no idea. I said, you need to go to the doctor immediately. The client was, why was I declined? Is that bad? I said, yeah, it's really bad. And his wife didn't know. You have 3 children. So go to the doctor. I had something, one of my primary care physician told me a long time ago, go to the doctor on your birthday. Get up in the morning, go on your birthday. That way, if anyone asks you, you know when you went last. Go to the doctor, get a full physical, then go out to breakfast, enjoy yourself. Go once a year and get a physical. Don't wait to apply for a life insurance policy and get declined because you were ignorant.
Don't forget too, the health insurance policy these days are only designed to get you one preventative year.
Exactly right.
Right? Astronomical rates, massive deductibles. So, yeah. So I think that wraps it up.
Awesome.
Sammy, I appreciate it. We're going to have you
Hopefully
back.
it was helpful to everybody.
Thank you.
Yep.